All right, guys, HBAR. So this is it. This is the one we need to hold. If you have not seen my previous HBAR video, everything is nice and neat in a nice playlist from the oldest to the newest. We are now at a very pivotal point for HBAR. So please check out the previous videos if you want to see how the narrative has built up over time for this exact move. But here we are. Q1 is now done. We now have the candle closure. I'm looking at the 3-month chart. And as you can see, our new quarter candle has already went below the previous quarter's low. We have already offered fair value to this 3-month imbalance. All right, this is a buy side imbalance, which should play as a support. If it does its job, it should play as a very strong support, and the target would be 40 cents, okay? Above 40 cents, that's where the liquidity would be. Right above that, we have all-time high, which is above 57 cents. All right, here's the thing. All because we have this area of support doesn't mean that it will play out as support. That's just the ideal situation. But if this 3-month level doesn't hold, then HBAR is likely going to see 4 cents, okay? Because failing to hold this gap and these two down close candles, okay? So what do I mean by hold these two down close candles? Do you see these two? I'm gonna make them red, just this box right here. I'm referring to the range of these two down close candles, okay? Price can do something like this. It could come down all the way down here, and it could go like into the middle of this down close candle right here and still be bullish, all right? That's how deep the pullback can be, and it can still hold the structure. The problem arises when we lose those two down close candles and we go below this swing low. All right, this is, in my opinion, this would be catastrophic for the trend. All right, I'm not going to talk about like fundamentals or the company itself. I'm talking about strictly technicals. This would be really bad, losing the low of October, okay, of 2024, October 2024. All right, instead, I'd be completely fine with price pulling even deeper into this this imbalance, because all of this is still qualified as proper structure, okay? And you can see that just back over here. Take a look at how price went from a little over 17 and a half cents. It pulled all the way back down into what? These down close candles here. But we did not lose the swing low. All right, so we still maintain those higher lows, and the down closed candles are playing as support. All right, so that's what I'm looking for in terms of bullish order flow. I want to see price maintain these down closed candles, use them as support, as well as this bullish imbalance, and see price flow higher. In the previous video, we talked about how the monthly just wasn't showing those signs we wanted to see. So if I drop down to the monthly, I talked about this gap right here. Would this be the one that pushed us to that 42 cent level? And as you guys can see, that just wasn't it. So price is now moving off of the 3-month, very similar to how Bitcoin is moving off of the 3-month. All right, and you can see how large this gap is on the monthly, but I wouldn't pay attention to this because it's already a part of the 3-month, right? So my main focus is how the candles look on the 3-month. If I go up to the 6-month, we have no gap, right? There's no, and this should not be there. Let's put this to only show, there's no gap here, right? So the gap we had was back here, this area right here. And this is still holding today. So we had this imbalance here. Price goes very deep, but look, we go right down to a down close candle playing as support. So we overshot the imbalance, held support on this down close candle, formed a swing low, and we've been going higher ever since, away from this low. All right, now in here we are now looking at that 3-month imbalance. Okay, so even though we've already offered fair value by just tapping in here, the quarter just started. We could still push lower and form a nice long wick if we were to get that support back up to head back to that 40 cent level. Okay, the reason why I say this is it is because this is the area that needs to support price. This entire area needs to support price. All right, otherwise, again, 4.5 cents, even lower. All right, just shy of above 4 cents, okay, would be the absolute bear case. But I want to see price be supported. Remember, price can come all the way down below 6 cents and still be bullish. But if we lose 4 cents, I'd say we're in a really bad position. Okay, dropping down to the monthly. Oh, we already seen the monthly. I have nothing really there. But let's go down to the weekly. On the weekly, we did have an internal to external setup play out. We had price go into this sell side imbalance. Okay, first candle tests the imbalance, closes outside of it. The next candle goes back up, sweeps the previous week's high, and then flushes lower. And a few weeks later, we hit external range liquidity at this low. From there, price drops 2 more weeks to hit the 3-month imbalance. All right, now as you can see, we still have some open areas of inefficiency here. And sure, I mean, price could drop to test those and then push higher. But again, because there's so many in this run up, I'm not gonna try to like tell you guys exactly which one is gonna be the one to reverse price. There's just too many in the run up. I can't really answer that. All right, the best I can do is throw a fib up and see which have we hit discount yet. Yes, so from this low to this current high, we are below. Well, no, that doesn't look right. Let me go see if I'm on log. Yeah, okay. So we have gone below the midpoint of this low to high. So we are in a discount already, meaning price does not need to go to these other 2 imbalances just to offer fair value. We've already kind of hit the big one in question, which is the 3-month. All right, but there's no reversal signal here that says it's time for price to go up. We're still taking out previous week's low, right? You see that? We just keep taking out previous week's low. There's nothing here that says it's time to be bullish. Okay, on the daily, we had price reach into a daily imbalance here just to further the narrative. Okay, and we did hit external liquidity at this previous swing low. We had a very weak close though, so after hitting external range liquidity underneath this previous swing low, you can see how we didn't get a strong close. It's just a wick. All right, but again, it's not time to be bullish. I'd want to see a strong close above this fair value swing high, right? Like a nice strong candle closure, come back and find support, and then push higher, get above these swing highs here before I even think about saying, all right, we're off to the races. Okay, but right now, even with the sentiment, everything going on, we're still pretty bearish. All right, but that's just what I have as far as an analysis on the HBAR. We still can go much lower, but you don't want to see this go below 4 cents, guys. I really can't stress that enough. Your area in question is this open area that we've now tested on the 3-month chart. All right, keep an eye out for that. Again, ideally, you want to see price hold this area, start pushing up to that 40 cents. But again, I just don't see it happening until tariff sentiment changes and we get back on the ball. All right, hope you enjoyed this analysis. I'll see you in the next one.